how can you really focus on growth if you're so focused on the individual deals themselves?
Because doing those deals will help me to grow. And if I do bad deals, there is no freaking way, there's not a snowball's chance in hell that I will ever be able to grow. One bad deal is going to set me back so much that I better make sure I don't do a bad deal. In fact, I'm better off sitting at home, not doing anything and watching TV than doing a bad deal. So being morbidly obsessed on not screwing up is very, very, very important. More deals doesn't cut it if all your deals are crap.
This is episode number 14 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
and Julian Sage.
And welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, Dealmakers? Julian Sage here, and in this episode, I had the special honor of speaking with Omar Khan, founding principal at Boardwalk Wealth, a private equity firm located in Dallas, Texas. Boardwalk Wealth has 1,300 doors and $120 million of assets under management. In this episode, Omar shares his experience working in M&A transactions, why he got started in multifamily investing, his process for sourcing and analyzing deals, and the most common mistakes he sees new investors making. If you like my show notes for this episode, go to multifsuccess.com/EP14, or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Dealmakers, to another episode of Multifamily Success Stories. In this episode, I have the special honor of speaking with Omar Khan. Omar, would you please introduce yourself to the Dealmaker community and let them know who you are and what inspired you to get into multifamily investing?
Hey, Julian, how are you doing today? Nothing big is inspiration. I mean, look, my background in finance, deal structuring, M&A. My family's been doing commercial real estate for the past 3 generations. So for us, part of this was managing our portfolio and part of this was managing our tax exposure. So there wasn't some I know a lot of people have dreams, when they were a kid about being a real estate this or that. That wasn't the case for me. I've had a lot of professional experiences that led up to this point, and then we were just at a stage in life where thankfully we were making enough money, so we wanted to manage our tax exposure. I already had experience in this industry, so it was a lot of being at the right place at the right time with the right need, basically.
Awesome. And can you kind of tell us where the company that you have right now, what it is that you're doing?
So we primarily acquire multifamily assets. We've got assets in Texas, Florida, and Georgia. About 1,300 or 1,200 and something, 60 or something like that.
Okay. And, with the show, we love going back and finding out, the story as to, what got you into it. I know that you said you've been involved in real estate nearly your entire life now. But
well, participated because, again, like I said, my family owns commercial real estate. So, as part of estate planning, lots of families do this, like they own something, they'll already put it into a family limited partnership or something, and where the kids are the beneficiaries. So being born, technically I participated in it, but it wasn't like something I was doing, right? So that's since the birth part. But in the past 10, 11 years, since I started working, a lot of my work was on the institutional side, putting deals together. And that wasn't my money, that's institutional money, right? Obviously, putting deals together, structuring deals. And as part of that, you get exposure to not just a very wide variety of people, but a wide variety of people with a wide variety of different investments. So, over a period of time, you learn more about different things. And in our particular case, when I moved down from Canada 5 years ago, my wife's a physician. Between her and me, we were comfortably paying 6 figures in taxes. So it's a nice problem to have, but it's still a problem nonetheless, right? So we decided, okay, we already know we got to pay taxes. I just don't got to pay everyone's taxes. I already have a background in deal structuring. And with my family, I've got a background in commercial real estate. So I kind of know the tax benefits and all of those things, which a lot of people I find out don't know about it. So I was very lucky that way to know about these things. So, like I said, right place, right time, right problem, right level of knowledge. That's what happened.
Can you kind of explain to it? Can you walk us through that first deal? So you said that you've been you've been involved in real estate, but can you talk to us about like when what that first deal was like for you? Did you feel like because of being in that upbringing with family involved in real estate and you kind of being around it that prepared you enough for that first deal that it was pretty easy?
I wouldn't say it was pretty easy. It was somewhat harrowing. But that being said, now that when I look back on it now, I realize that because, quote unquote, my first deal by myself, really, and with partners, it's never a one-man show, right? Because it was not my first rodeo, because I had kind of gone through at least the process with either through family or on the institutional side. So it kind of gave me some perspective, even though when things were kind of going a little sideways, right? I was like, okay, I'm panicking, but I know I shouldn't panic. So it's less panicky in a weird sort of way. You can talk yourself out of a problem, right? But I wouldn't say it was easy, man. No freaking way. I wish it was, but it wasn't.
Can you walk us through what that was like for you? Like, what was there a switch or something? Like, being part of that upbringing, was it just like this is a natural progression forward?
No, dude, I'm going to be honest with you, man. A lot of people have asked me this, and to be very honest with you, I wish I had a cooler story than telling you I had a tax problem. I was paying a lot of money in taxes, and it was really paining me every month how much money I was paying in taxes. And even though it's a good problem, because presumably you're making in money, that's why you're paying more in taxes, right? I mean, these things go hand in hand. But knowing that I had an alternative, knowing that something out there, in my particular case, knowing that this existed, which could help me alleviate my tax position, and still not doing it and still getting crushed on taxes, was the impetus for me to go do it. As opposed to there was no grand plan about buying this building or that building or seeing someone. It was just a pain point, and I think I was just old enough to be making real money, and then realizing, shit, I make gross income wise, I make a lot of money. Net income wise, I'm getting hosed, and there's an in between portion. And why the hell do I got to go pay that every freaking month? But I'm sure lots of people who, pretty much anybody who's done a job, they've seen their gross income, which can look nice, but then they look how much money gets deposited into the bank, and they're like, oh, shit, this sucks. So that's what the thing was. There was no grand plan. There was no big dream. It was just being old enough to make enough money and then paying, not by choice, taxes, and realizing how painful it was.
So what about starting? Did you start this company, or was it just like you're gonna partner with somebody, you're gonna kind of learn the ropes?
This company. Look, I have partners, by the way, in my projects, but this is an investment and holding company that's mine internally.
So you said that taxes, trying to alleviate those taxes was the biggest incentive for you to get into it. So what were you doing prior to this, that you were, doing so well?
M&A, basically work on the corporate and investment banking side.
Got it. And so you were making enough money from that it was just like, hey, I have to, but the way that you were getting paid out, you were making too much.
No, it was getting paid out the same way that anybody else gets paid out. You're an employee. So no matter what your salary is, they're going to deduct taxes at every 2 weeks. They're going to deduct your tax. You see your payslip. So no matter how much money you make, those taxes are going to be deducted, whether you like it or you don't. I mean, my liking something had no bearing on whether they deducted taxes from my payroll or not, because I freaking hated it, and they still went ahead and deducted taxes.
So why not have somebody else do all of the work for you? Like, why dive into this industry head first yourself?
Because then I could qualify as a real estate professional. My wife is a physician, so she makes a very nice salary as well. So it wasn't just I was doing okay, but she's doing very well as well. So then to be qualified as a real estate professional, so then we could take those deductions against our entire household income, as opposed to just deduction against real estate income only, which may or may not be equal to the deduction. And it typically isn't when you do a project. So taking it against the bulk of my household income, that's what was really exciting. I know, really, it's a really boring answer. People have really grand answers, and mine is just a really boring, simple answer.
It sounds like you figured out the rules to the game and you just really wanted to just play it in your favor and you
I
want to max.
honestly, bro, I didn't even think that far ahead. I just did not want to pay taxes.
Got
I
it.
was like, come on, this freaking sucks. I technically am making money, but not really. What the hell? Right.
So, going back to that first deal, can you walk us through? You said that there was definitely a learning curve to that. What was your experience like trying to save money? Was that your primary goal for that first deal? Was just like, how much money can I potentially write off on this deal?
Yes and no. Well, the primary goal was to close the deal. Then I could take the deduction, because if I didn't close the deal, then there are no deductions coming to me, and then it all sucks. Look, on that deal, it's a lot different when you're playing with somebody else's money, and when somebody else has signed off on the loan and you're merely an employee. That's a very different, no matter how much responsibility you take, right? But let's be honest, your ass is not really on the line. Right. But when you're signing off on the loan, when you have to go and make all these relationships to potentially then have that equity come in, you raise it, you invest it, then you got to wear a lot of hats, because starting out, not everybody, and in fact, I didn't have the budget to go hire everyone. Right now, I have employees, I have assistants, but starting out, I didn't have all those things. So wearing multiple hats, and then especially during the close process, so many things are happening at the same time. You got to be talking to lawyers, you got to be talking to lenders, you got to be doing due diligence. And again, you're not doing it by yourself, but you're responsible for it, right? And if things go wrong, somebody can come say, oh yeah, there's a problem here. But it's your freaking problem on how to go handle that problem and how to resolve it within an appropriate time frame. So then this whole thing doesn't get derailed and everybody doesn't hate you. Right. So there's a lot of pressure that way. And so there's a learning opportunity that way. And there's lots of good things that I learned. But yeah, I wouldn't want to go through that process again.
What was your experience like doing M&A? And if you could explain what M&A is for
M&A
maybe those.
basically means mergers and acquisitions, valuing companies, all of that stuff. So you can even call it A&D, acquisitions and divestitures. Acquisition and divestitures was more on the corporate side. M&A, valuation, equity research, all of that stuff was on the sell side or the investment banking side. Now, basically, when you have that sort of experience, you understand, let's put it this way, you should, by that stage, with a couple of years under your belt, you should be able to understand the financing component of it, which is the debt. You should be able to understand the valuation component of it, well, how much is this thing worth? And to a certain degree, you should be able to understand how to forecast, budget, and do all of those things. So those are pretty big skills. Now, those aren't the only skills, but those are pretty high-level skills that a manager needs to have. Because look, the day-to-day, for instance, going in and somebody goes in and does the construction, that's a very good skill, but I don't need to have that skill. I can go hire for that skill. Right? Or who's going to be the property manager, knowing how to interview them, how to keep them accountable on the budgets, how to set up a budget with them, in fact, when to push back and when not to push back. Because a lot of times a property manager can do everything correctly. And look, if things aren't going to work out, things aren't going to work out. I mean, a property manager isn't a magician, right? But similarly, a lot of times the property manager could be slacking off. And knowing when to make that call and when not to make that call, those are the types of experiences you should have by the time you've gone through these sorts of professional experiences, right? So they help you, but obviously there's a lot of learning on the job because every business is different. Everybody does business a different way, and you always have to adjust, basically, according to the personality of the person that's your counterpart.
Working in M&A, you said that there's a bunch of different skill sets involved when you have to do this on your own. Did you have any other experience doing other aspects of multifamily investing, or were you just on the financing?
No, man. I knew the financing part cold, I knew the valuation part cold, and I knew the budgeting part cold. Like, you could wake me up in the middle of the night and I could still tell you all of these things. And I can see somebody's budget, and within like 5 minutes, I can tell you where they're trying to sandbag and where they're not trying to sandbag. And again, you don't have to know everything about everything, but you need to know enough to know when you're getting screwed and when you're not getting screwed. That's it. The day-to-day stuff somebody else can go handle. You just need to be a high-level manager to understand all of these things.
How does having that experience definitely it navigates you around a lot of hurdles that some beginners would start out with, but did it really kind of push you into some other issues just because you didn't have that expertise?
Sorry, can you say that again, please?
Like you had that expertise with knowing how to evaluate the numbers and kind of just make sure that, hey, this is a great deal for me personally
Uh-huh.
or for the partners or whatever. But having that skill, did it make you blind to other things that you just didn't know uh, going into it?
Well, I'm sure there must be blind thing. I'm sure I had blind spots, and to be very honest with you, maybe I was not self-aware enough to even know what my blind spots were, right? Because I mean, there are blind spots for a reason. But that being said, I think one of the big blind spots for me was that I was coming from an environment where people are, it's a very type A sort of environment, right? Where people are expected to work 80 to 100 hours a week. And if somebody has a problem, for the lack of a better word, your boss will come and tell you, STFU, and I don't really give a shit. So go figure it out, right? And you realize in the real world, like when you're dealing with such a wide diversity of characters, that might not always be, that's not always the way that work gets done efficiently, because different people react differently, right? It's just that every industry has its norm. So, for instance, in finance, that hard edge sort of finance, people will literally chop you off at the knees and not even think about it, right? But that's understood because that's par for the course. Because everybody's like, look, bro, I got to work 80 to 100 hours a week. So if you want to bitch and moan, go to the side, bitch and moan, come back, start working, and we'll figure it out later. But you can't be this explicit when you are in other areas of life. Because look, what if your construction manager just be like, screw it, you're an asshole, I'm not going to work with you, right? Or your PM doesn't do the work because he or she does not feel motivated to do the work. So a lot of guys, including me, have a hard time making that transition because we're coming from an environment where people are like, okay, you have a deadline and you got to stick to a deadline or you got to go find a new job. So go figure it out. And typically that works on people like us, but that doesn't necessarily work on everyone. So understanding and making that transition, I think, is oftentimes harder than any technical expertise you may or may not have, because it becomes a personality issue more than a technical competence issue.
So from what it sounds like was being a part of the institution where things are very, pretty black and white. Sounds pretty cutthroat.
It's not
But that
cutthroat
was
if you think about it, because it's black and white. Either you do something or you don't. There's no in between. But the real world doesn't work like that.
So, how do you see a lot of multifamily investors in the space right now? I mean, a lot of people are still working full-time jobs, or they're just trying to find this deal.
I don't really get it. I don't really understand how you can be working a full. Look, I'm not saying you shouldn't do it because we've all done it, but I don't think how you can be doing it for 4 years, or 5 years, or 6 years, or 2 years, and be doing this full time, because your investors need to get their head examined if you're going to be doing your job and then you're going to do this in the evening. Because look, this is like any other business in the world, like any business in the world, doesn't matter if it's multifamily, part-timers get killed. That's just the way it is. So if somebody's doing it for short term, maybe 3, 6, 7, 8, 10 months before they quit their job, that I get that. 100% with you. But if somebody's going to be doing this for 2 or 3 years and not quit their job and not become full-time, well, I think their investors deserve what's coming to them. Because how can you give your money to somebody who's not even this confident about their own skills that they're not going to do it full-time?
So when you started your own company, you just said that you're going to be leaving your high-paying job and say, I'm just jumping in.
Shit. I mean, how would I expect you to give me money if I wasn't willing to make a sacrifice?
Did you have any concerns or any fears involved with that transition?
Yeah, I was going to make less money. But I mean, look, at the end of the day, my point is there's always fears. Look, as an example, 2019 was a great year. 2020, nothing has happened because of COVID. Also, we're very particular because we invest our own money. So I'm just not going to go rush into deals. So 2020 sucks. Like, I've got zero new business. If you think about it, I would have been better off if I had a job in 2020. But that's just the way things are. How can I expect for you to give me your money, in all honesty, with the expectation that I'm going to do a bang-up job full-time, 100% committed, if I myself am not 100% committed to this thing? So yeah, technically it'd be great if I had a job, but look, it's kind of hypocritical for me to go look for money and tell you that I'm going to give it my best if I'm not even willing to take any sort of risk.
How did you, when you did leave your job to do these deals full-time on your own, not having, like you said, you had experience in one particular area and you may have been lacking in others. How did you confidently work with investors that maybe, where you didn't have a full, well-rounded experience, trust them to be able to provide you with their money
But
to
look, I
invest.
had a lot of relationships basically based on my previous experiences. I was working in investment management. So I had a lot of experiences which somebody else might not have. But look, then again, somebody might be really good at marketing. And there are tons of people who are actually better at me than marketing. And they've raised more money than I ever will. And they don't know their head from their ass when it comes to operations. But they don't have to because they're so good at marketing and people keep throwing money at them, right? So we all have our niche. My niche was I had worked with a lot of people. They knew me, they trusted me, they knew my work ethic. And that was a good enough representation of what I was going to do. But hey, somebody might have a different background and that's their strong point.
Do you think that that you, because people like to control everything on their own, do you think that this is something that you can honestly do by yourself, or do you?
No, you need to have a team. You have to have a team. There's no freaking way you can do this by yourself. You can try to do it by yourself, and you can try to do it. And maybe you do one or two deals, and you'll make your life miserable. And by the way, you won't do a good job, no matter how smart you think you are, because this is not a test of intelligence. By the way, it's not who's more intelligent goes ahead. It's just a test of time management, organizational skills, and do you really want to be doing the job of somebody whose market rate is say 20% of your compensation? Because I don't think that's a smart way to spend your time. And yeah, in the short term, it sucks because you got to pay people out of pocket and you're not making any money. So how the hell would you pay somebody out of pocket? But I mean, that's just the way it is. So
What that first deal, what were some of the things that you learned from that first deal that you tried to implement into the second?
Definitely be better at picking partners. It turned out I was the only guy who's working, number one. Not only worked pre-close, post-close also, I was the only guy who's working. So, but luckily for me, my partners didn't put, obstacles in my way. So, I mean, that's something, I guess. So definitely becoming better at picking partners. Definitely that learning experience taught me on how to basically manage operations better from the start, as opposed to taking my time to get into them. So there's a few small little pieces here and there. And by the way, you keep learning these things. So there's no 5-step guide, I guess, on how to pick the right partner. Everybody's so different.
What were some of the biggest mistakes that you made with picking the right partner for this deal?
Oh, just their level of competence and dedication to basically the project at hand. Like I and like lots of other people, most people in the world, a lot of people are very, they're responsibility oriented. Like if you get a responsibility, you don't have to necessarily like doing that thing. You just have to go do it because, you said you were going to go do it, right? Well, it turns out a lot of people in the world don't seem to think that way. Like, because I frankly, like I was talking to one guy and he's like, well, I don't like doing it. And I was like, well, I don't like hearing you whine, but here I am. So what does that have to do with anything? Well, let's just go do the work, right? So my point is likes and dislikes have nothing to do with reality. That's what I think, at least. But a lot of people obviously seem to disagree with me. So
and how can you judge a person's character? Because I mean, if you're dealing with other people's money,
no, dude, you tell me. You tell me. That's like the $1 million question. You learn it the hard way, I guess.
Well, have you found those right people?
No, I haven't. I just maybe my instincts have become slightly better, but I can definitely tell you, I have not been able to find this magic 5-step process, which was just like somebody goes through it and bam, I get an answer with a 95% confidence. No, I don't know.
How about just overall qualifying for your new investments?
Yeah, look, I think a lot of this is still instinctual for me, which obviously doesn't give you the right answer because your instincts would be different than mine. And mine could be wrong, by the way, right? So no, I don't have a good answer. I think your bullshit detector gets a little bit better, I think, but yeah, no, I don't have an answer.
What would be some of those bullshit things that your radar would go off?
I don't know, man. It's very hard. Like test people not just for personality, but for competence as well. Now, I don't know how you would test somebody for competence. That's a tough one. And that's something I'm beginning to learn more and more about, but I don't know exactly. Like I said, it's a learning process. I'm learning. Obviously, I've become a lot more cautious, which I think is a good thing generally in life also. But I don't have the answer. I wish I did. And if you find out, please let me know. I'd love to subject everyone, including myself, to that test. So then we all know where we stand.
What has been the most challenging part of scaling your business?
Oh, just finding the right deals, because we put our own money into deals, unlike a lot of syndicators who try to raise money but never put a dime of their own money into the deals, right? They all say they're investing money, but when you look at the K1s and everything, they're not putting a dime of their own money in, right? So finding the right deals, and we're very model driven, as we're very quantitative, like me and this other partner, he's got a similar background. So a lot of times I see deals from other guys and I'm like, bro, like we looked at this deal, what happened? And then we look at their numbers like, yeah, our numbers were completely off. Doesn't mean their numbers are wrong. It just means our numbers didn't match. So that deal was not an appropriate fit for us. So just finding the right deals, right markets, that sort of stuff.
And what are some of the things that you're doing to be able to find more of those qualified deals?
Same thing as everybody else is doing, man. Pounding the pavement, talking to people, having deeper and deeper relationships with people in the market. But to be honest with you, man, you can have the best deal in the world, and you can't blame a seller or a broker if somebody else comes in and pays 25% more than what your price is. You can't blame a seller or a broker then, right? Because they're just trying to get the best price. So I might be, say, at 100 grand a unit, and if some guy comes in and pays 130 grand a unit, no matter how pretty I think I am, no matter how good my relationship with somebody is, that's not going to make a difference. So you just have to be patient, right? I mean, it sucks when you're on the receiving end, but you just got to be patient.
In what situations are you willing to kind of push? Because it sounds like a lot of people are willing to overpay for these deals right now. Do you just kind of sit on the sidelines, or do you push your numbers?
Nope, sit on the sidelines. I mean, it's painful mentally, but I mean, look, if it doesn't fit my model, it doesn't fit my model, right? I mean, I know it sounds obvious. It isn't. Trust me, it's very mentally painful to sit on the side when every jackass you know is doing a deal and saying they've done a deal, and you've seen the exact same deal. You're a sponsor in the market, and it doesn't seem to work in the short term. But a lot of times we're just paid, most investment, by the way, professional investment managers and not guys who are trying to do this part-time. A lot of times they're just paid to sit on their ass and just let bad pitches go away. So just waiting for that big fat pitch that comes. So then they can just take a swing at it.
Do you believe that your mindset, it sounds very similar because you said that you have experience in trading commodities as well?
Yeah.
So do you think that very, that very process, this is what it is type of mentality is attributed because of that?
Yeah, it's all because of this. Look, we're all a product of our past experiences and upbringing. Like me, there's a whole bunch of people out there who've gone through similar experiences, very quantitative, very analytical, and they would do the exact same thing. So I'm not doing something special here, right? They, with similar backgrounds and experiences, people would do the exact same thing. You've got to be process oriented, and sometimes it can suck in the short term, but that's just the price you pay to play, right?
What do you see the biggest mistake that a lot of investors make when they maybe aren't when they're sitting on the sidelines and there's deals coming in, but they see everybody else increasing their price? Do you see a mistake that a lot of investors are making?
Yeah, I can tell you this. Most guys don't even know how to financially model, right? And if you don't know how to make a financial model, simple ones, I'm not even talking complex ones, it's very hard for you to, for instance, value something appropriately. So a lot of guys, what they do is they download a model off the internet, or some stupid guru will give them like $100 model or something and give it a fancy name, and then you download it. And the problem is, if you don't understand the building blocks, if your fundamentals are not good enough, then no amount of copying off other people is ever going to help you. Look, it might make you successful, quote unquote, in the short term, but you got to put in the hard yards. It's like any other business. It's like sports. It's like music. It's like, I guess, being a lawyer, a physician, accountant. You just have to spend the hard yards in trying to learn and understand your craft. And then it's pretty easy to do stuff. But if you don't spend that time, if you're trying to listen to motivational, stupid podcasts, right? Or, I don't know, talking to some guru on a weekend seminar, I mean, these things aren't just, nobody's just going to go tell it to you. You got to take responsibility. You got to go learn these things. And they're not hidden, by the way. I mean, all of these things you can find in a textbook. So none of this information is hidden. And with YouTube and with the internet, you can literally learn how to financially model in less than a month at a pretty sophisticated level. So, but you got to put in the work. My point is, if you don't put in the work, none of this stuff matters.
So, where do you recommend? Because I mean, you had a pretty extensive background in the M&A space, spending 80, 100 hours a week doing this. But
not by choice, I can tell you that.
Not by choice, but there's people that are trying to do this by choice. Maybe they do have a full-time or a part-time job. They're trying to get into this. How, what's the best way that they can learn it? Do they go to school? Do they get a part-time with an M&A?
Textbook. Literally pick up a freaking textbook, man. Textbook, simple accounting 101 textbook, and then literally go to YouTube and type how to build a financial model. In fact, there's a guy who even will give you free information. He's a very good guy. I don't know him personally, by the way, so it's not a plug for him. I think his website is Adventures in CRE, Commercial Real Estate. His guy's name is Spencer Burton. I think he's got an extensive, very nice background, very sophisticated background, and he's giving you a lot of models for free. And you know what's funny? A lot of people will copy his models, but they will not understand what actually goes into that model. So you're still making the same mistake, because that guy is obviously going to give you a template. But if you don't understand how the template is made, you're going to make mistakes. So use him as an example. He's a very sharp guy. I would highly recommend you guys check him out. But look, shit, you can go to YouTube, type how to build a financial model. It's not that hard, but it's not that easy also, right?
With your mindset, you were looking to get into the space because you're trying to save money on taxes. Do you have maybe a different approach to how you are structuring the deals, or how you're investing into them because you're trying to save?
No, not from a tax point of view. Structuring isn't really that much of an issue. Most of these deals are structured the same. They're all partnerships, which are flow-through vehicles. So it's structuring-wise, it's not an issue. The only thing for us is, or rather me, is because, again, we as partners put a significant chunk of our own money into our deals, is that we just prefer flexibility. Look, another partner of mine, his family's been in business for the past 2 or 3 generations as well. So when you have that context, you understand that things go up and down. There are waves. And again, you don't have to like it, man. When you're on the down cycle of that wave, it sucks. But so you just have to realize that anytime you're doing a deal, you just have to be adequately capitalized. A lot of people go in trying to be cute, raising the least amount of money. That's why, when we had this COVID scare happen, you'd hear people say, well, we're playing defense now. And you're like, shit, dude, what kind of championship winning team only plays offense? Gotta always have a defense, right? So you should always be well capitalized. And a lot of guys weren't well capitalized. That's why they paused their distributions. They did not pay any of their investors out. So that's number one. Number two, always having flexibility. So a lot of times people will go in with fixed rate debt, even though they want to sell in 2 or 3 years' time, because that's the model, right? You come in, you do your work, and you sell in 2 or 3 years' time. Well, the problem with a lot of fixed rate debt, and a lot of people are finding this out now, is that their yield maintenance is very high. So I don't know if people know what yield maintenance is. You can go look it up, which basically means that if you want to get out of the deal, and if somebody doesn't assume your loan, you've got to pay a significant penalty. And oftentimes that penalty is in the millions of dollars, right? So we structure our deals with loans where we don't have to pay that penalty. Again, none of this is complex stuff, by the way. Just to be very clear with you, this is not knowledge that I just have and other people don't. This is a very common knowledge. Lots of other people do it. But you still have to, if you don't know it, you have to go looking for a solution, right? You can't just copy off other people. So just having flexibility, understanding you should be well capitalized, those are the 2 biggest things I think people should look out for.
In a highly competitive market where, maybe you found this deal, did you have those existing relationships where you could raise that capital pretty easily? Or maybe for people that are trying to raise capital for a deal that they find, how do you approach selling a deal to potential investors?
Look, I don't know if raising capital part was easy. I had prior relationships, but it's never easy, right? Look, or rather, a certain level becomes easier, but a level above that becomes harder. So maybe you're used to raising $2 million, but you can't raise 10. But you're pretty comfortable raising 2 million. So the 2 million might be easier. It's never easy. It's easier, but 10 might be a stretch. So it's never easy. And look, how you're selling this, to be honest with you, I think it all depends on your personality, on your relationship with people. In my particular case, I never really, maybe it's my background. I never really understood this old Robert Kiyosaki and all these guru sort of things about, you got to tell people this is an opportunity. You're not asking them for money. I didn't want to be a used car salesman. No offense to used car salesman. I didn't want to be a snake oil salesman and tell them, oh, this is the greatest thing since sliced bread. But you do want to market yourself, right? So mine was kind of anti-marketing, but also I had some relationships, and a lot of those relationships happened to be analytical people who were doing investments for a living. Marketing to them is very different than marketing to a soccer mom in the Midwest, right? So you got to play to your strengths. Maybe you only know soccer moms. And by the way, soccer moms are pretty freaking rich. Okay. So your marketing is going to be a lot different than my marketing. So you got to figure out what is your niche, what is your avatar. And given that avatar, what steps do you got to take to meet the pain points of that thing, right? My investors, they're looking for analysis, analytical points, give me the hard numbers. But say somebody else, some guy who's, I don't know, is a businessman, he might invest because he or she likes your personality. It's a go-getter, young guy. I met him. So different folks for different folks. So knowing who you're talking to is very important.
From, and speaking with you, I mean, you got a very analytical, numbers mindset for maybe a lot of people, and a lot of people in the space that are preaching, the guru talk. They say, oh, you're selling the story, you're not selling, the product. It's not about the features and benefits.
You're never selling yourself, and I'm like, dude, you're always selling yourself. And if you don't get it, if people don't believe you're honest, that's step one, man.
So what were some of the challenges that you saw from, for other people that are maybe very analytical and they're just like, hey, I want to be the numbers guy. I just want to say, this is what it is. These numbers, either take it or leave it. How did you kind of approach when you first started offering?
People suck at talking to people.
Right.
Like, so human beings. So in my particular case, I think I wasn't as bad, or I'd like to think I wasn't as bad talking to human beings and not robots, right? But a lot of analytical people, they're not very gregarious. They're not extroverted. They just get stuck at stupid points, which logically are correct. But I mean, in real life doesn't work logically. We're human beings, emotions are involved. So a lot of analytical people get stuck at emotional points, which may or may not be right, by the way. And the whole point is you can never be stuck. You got to keep moving. You got to meet the pain point of your investor. So if your investor has a pain point, you've got to find a way to satiate that pain point or fix that pain point. And if you get stuck saying, well, this is the best thing in the world, well, shit, it might be the best thing in the world, but you're not getting any money from that guy. So you got to figure out, do you want to win this battle or do you want to win the war? Right? And that's hard. It's not easy. And again, it's like that partnership thing. I wish there was a 5-point success formula, because then I'd be crushing it. But there isn't. And that's just part of the learning process. When you talk to enough people, you understand what your sales pitch is. How do you talk? The couple of objections you get, how do you respond to them? What's the best way of responding to them? And that's just a trial by error. Now, nobody's just born with it. You just have to go through that process.
Do you find that it's more challenging dealing with like analytical people where that maybe they're stuck on a particular point that maybe you brought up, and they have to overthink?
I am not challenged by that, but that might be because them and I have a similar personality. But somebody who's a high level, say market, and I'm not using this in a bad way, somebody who's purely a marketer without the analytical background, talking to an analytical background person, well, that person might get stuck and think, oh, what an asshole. He's just focused on that one thing. And yeah, tough shit. I mean, what are you going to do about it?
So after that first deal, how did you start to scale your team, and what was the next step for, you said you got this one, you partnered with somebody. How did you grow after that?
Well, when you get more money, Julian, you can just keep throwing money at a problem and it solves itself, right? Oftentimes in life. So when you got more money, or rather more disposable money after you've taken care of yourself, lots of problems solved by themselves. So scaling part becomes easier, but it's still challenging in different ways. You just have more partners, more people know about you. So whereas in certain respects, it becomes easier, in other respects, it becomes harder because now you have more responsibilities. And if you screw up on one, it has a cascading effect all the way through. So its scaling was nice. But to be very honest with you, the last few years have also been very kind because the market's just been going up. So when the market's going up, every idiot thinks he's a genius, right?
Are you saying you're one of those idiots?
I could be. I mean, you invest with me and you'll find out pretty quickly.
So I mean, but coming from, the M&A finance background, I mean, you didn't have experience with like teams and
Oh no, I
maybe,
did, man. I was managing teams there.
oh,
Humans still work in those environments, man. They're just more cutthroat teams, and they're shorter, more focused teams, but they're still teams. All work at any high level enough work happens in teams. There's this whole myth of somebody doing things by themselves, and that doesn't really happen.
But as far as like building like a multifamily investing team, like how did you know, or how did you try to develop that? Did you try to like go vertically integrated? Did you try to get like a property, develop your own property management, or did you say we need
No, I didn't develop my own property manager. I just had better asset managers, better accountants, and that sort of stuff. And the property management stuff for the time being, we have very great property managers, and I let them make money off of me because they do a good enough job.
And when did you decide like, hey, I need to maybe step back from the underwriting the deals and doing all the financial analysis?
I haven't stepped back from it.
You haven't, so you're still actively involved in all of that?
No, you can't. I mean, actively to a certain degree. I mean, it depends on what you're talking about. But I haven't, because frankly, to be honest with you, if any investment manager gets away from analytics or analysis of some type, then they're looking for trouble. They're asking for trouble, in fact.
So how can you really focus on growth if you're so focused on the individual deals themselves?
Because doing those deals will help me to grow. And if I do bad deals, there is no freaking way, there's not a snowball's chance in hell that I will ever be able to grow. One bad deal is going to set me back so much that I better make sure I don't do a bad deal. In fact, I'm better off sitting at home, not doing anything and watching TV than doing a bad deal. So being morbidly obsessed on not screwing up is very, very, very important. More deals doesn't cut it if all your deals are crap.
Do you feel that there ever comes a point where it's just like, hey, I'm gonna have to train somebody else to be able to do? Because I mean, obviously,
No, I have other people who are trained to do it. Don't get me wrong. I have other people who are trained to do it. I still have to go look at their work. I still have to go do a bunch of that work by myself just to confirm some stuff. So day-to-day stuff they can handle. But eventually when it comes time to pulling the trigger, look, dude, I'm the one signing off on these loans, man. Like, one of these things goes south, my ass is on the line, for the lack of a better word. Okay? I'm not going to sign on a $20 million loan just because I've trained somebody. Yeah, they're trained. They're excellent. I'm very lucky to have good analysts. They're working on it, but their ass is not on the line. My ass is on the line. So yeah, they do the work. They collect a lot of data. They present it to me. They run their own analysis. I still have to look over it, right? I'm not going to just be like, all right, done. I don't really got to do my job. You can't do that, because if you do it, you're in a couple of years, life becomes pretty painful pretty quickly if you do that.
What about the other aspects of the business though? Because you're very focused on the numbers, but there's other aspects to the investing that's involved. How do you
Give me an
manage?
example of what else is involved if I don't look at my numbers?
Oh, let's say the management of the building or the value add.
And literally, that is part of my numbers. So I have a budget. I have a construction budget. I have operational metrics that people need to hit. And if they're not hitting that, that means my financial numbers are getting affected. As an example, if we don't renovate enough units, like we've agreed, let's assume we're going to renovate 5 units a month, right? And each of those 5 units, let's assume we're going to get $100 rent premiums, and we take 4 weeks to renovate those units and another 4 weeks to lease them up. So presumably, after 2 months, I should be able to get at least $500 more in rent, potentially, right? If we lease them up. Well, that's pretty evident in my numbers, right? So if I'm not managing my numbers, and if those operational metrics are not hit, then I'm dead in the water, right? Because the whole point of this is you take so much pain on your shoulders the first 2-ish years, depending on the size of the project, so that by the 2.5, 3, 4 years, if you don't sell, if you keep holding on to these things, life becomes much simpler because you did the bulk of the work. But if you say, well, whatever, I'm going to take time off, not look at my numbers, stuff doesn't work this way. This is what I'm telling you, man. All these gurus that tell you this kind of stuff, if they were that damn successful, they wouldn't be giving you weekend seminars at the airport Sheraton. Okay? You don't see Sam Zell. Hell, you don't even see Donald Trump. This is not a political comment, okay? You don't see Donald Trump giving you seminars at the airport Sheraton on a weekend. Okay. Hey, how to get rich? Just think positively and you'll become rich. Okay. People are making real money. They're freaking crushing it in real estate. They don't have time to be your mindset coach, right? Because they're making so much money. And the reason why they're making so much money is because they are obsessed with their numbers. They just
So
they can't go to sleep at night if they don't look at their P&L.
so do you, I mean, but there's got to be things, are there things that are outside of your control? Obviously, like let's say the developers are bad, or
and that's my job to pick the developers, right? And if my numbers
right.
reflect, like there's financial numbers and there's operational metrics. So every week, every day, not every day, every week we have some operational metrics, like where is it leasing at? How many, what is the foot traffic on our property? Like how many sales have we had? What is the delinquency level, right? Like how many delinquency dollars wise and delinquency number of people wise, right? Because they're both separate things. How much foot traffic do we have? If we have, say, X amount of leads, what is the conversion from the top of the funnel to the bottom of the funnel, right? I don't have to wait 2 months or a month to see this. This is literally every day, every week, you can see these stats. And not only do you see these stats, you see these stats relative to last week, last month, last quarter, whatever you want to compare it to. So you can see these things every day. So if you don't see these things every day, this means you're not doing your work. So that is my job. I mean, it's not my only job. I mean, that's my, say, my analyst job as well, right? But that's it. Numbers don't lie, man. This isn't like a feel-good business. This is purely numbers-driven. If your stats are up, your stats are up. If your stats are down, you want to know why they're, in fact, you want to know why your stats are up also. But if they're down, you need to know why they're down. As an example, your foot traffic is down. Why is foot traffic down? Okay, at the start, in say the middle of April, because of COVID. Nobody wants to leave the damn house. Okay. Now, if you didn't know the reason behind it, you'd be like, well, what the hell's going on? But reason allows you to put some context. Foot traffic is down. What do we do to get higher foot traffic? Maybe offer more look and lease specials. Maybe offer a concession. Maybe offer a raffle draw. I don't know. Somebody comes and you give them $1,000 every 10 people, right? Whatever. But you got to take these proactive steps. And shit doesn't happen after a month because your feedback loop is going to be so long, right? You got to look at this thing every 2 or 3 days, ideally every day. So within the course of the week, you're able to make course corrections, right? Because if you look at this thing once a month, well, by the time you're looking at this thing, this data is already 4 weeks old. So whatever thing you're going to do now, that's going to take another 4 weeks. So where are you going to be? And if your developer is bad, by the way, well, it's your freaking job to figure it out if the developer is bad and to figure it out pretty quickly, right? Because if the developer is bad, you got to go to the guy and be like, look, man, either we got to fire you or you got to clean up your act. So figure out which one of these two things it is. But you can't go to the developer to talk about something that happened in June, but you talk to them in November because you just didn't realize till November what was going on. So it's all numbers, man. All numbers.
So I mean, it really sounds like that is a financial funnel, the same way that do you also analyze the investor funnel or the deal funnel the same way?
Yeah, man, everybody's got to do it. It's all stats, right? Look, on your marketing side, do you think marketing is all fluffy? It's not. Marketing is all stats. How many visitors did I have? How many people added to my mailing list? How many people came to my website? Of the people that came to my website, where did they go? Of the people that went to this web, like certain page, if they landed on our web, say we have 2 landing pages, right? A and B. How much is the conversion on A? How much is the conversion on B? Which thing is popping where? What ad do I put? All of that is stats, or we're looking at stats. None of this is done on a feel-good basis, by the way. Professional marketers, they're just looking at numbers the whole day. They don't really care about like video editing and stuff. They'll look at the numbers, realize this message resonates, and then they will tell, say, their video editor or whatever, okay, I want you to edit with this thing. But they got to look at the numbers first, man. All of this stuff at the higher level doesn't work like this.
What would you say has been your biggest failure up until this point?
Oh, biggest failure is not just blindly buying every single deal because I didn't know the market was going to go up every single year. That's my biggest failure. Being too analytical.
Being too not buying enough deals.
That's my strength and weakness, right?
Mm. And what I guess what would you do differently if you had to start from scratch?
The first thing I'd do is find a way to be born in this country. Number one, I don't know how I'd do that, but if I was born in the United States, my God, my life would be a lot more easier. or at least I'd be a lot richer. So if I could do that, that would be the big thing I could do.
Are you still actively? Are you still living in the? Are you living in the U.S. right now?
Yeah, dude. I'm in Oklahoma right now.
Okay. And you said that you've been. Have you been investing while you've been? Because it sounds like you're pretty a world traveler. You've been to Dubai,
I live
Toronto.
here. My company's here. Our operations are here. We do this for a living.
Okay.
But I wasn't born here, so I wish I was. That'd be helpful.
Very nice. Very nice. And what would you say is probably the most influential thing? I mean, I know that you talked a lot about, not just listening to the gurus that are trying to sell courses or to try to get you to go to their hotel seminars, but if you could give like actual practical advice to people that are interested in getting into the space, what would that be?
Well, it depends what you would just, I don't know. Well, it depends what you want to do. So kind of figure out what you want to do first and don't try to do everything all the time by yourself. Try to find the right partners. I didn't do it. Easy for me to say to go find it. I didn't do it, but don't try to make the same mistake I did. And look, we're very lucky we're living in a time where information is very easily available. So I would highly suggest people to stop listening to these bullshit podcasts about mindset coaching, okay, done by people who've never had a real job in their entire life, right? Honestly, go pick up a textbook, okay? Honestly, you'd be surprised how many things you can learn from a textbook, okay? Go pick up a textbook. Copy people who've actually done this before, not saying they're doing it, but actually have done it before. And look, in every city, there are successful people. I don't care where you live in the world. There's every city, every place has successful people. So try to get introduced to those people. And if you really want to make it easy, literally copy everything they do. The way they dress, the way they talk, how they look, how they behave. Literally copy that, because success leaves clues, right? I think Tony Robbins said it. So success leaves clues. So if you model yourself after people who are actually successful, not people who say are successful, but who actually are, you really can't go wrong.
And what question do you have that, maybe there's another investor, another company that is at the same size than you, or where you'd like to be able to go? If you could ask them anything or pick it, jump into their mindset, what would that be?
Oh, it depends who there is. There's lots of companies most companies I feel are bigger than mine. So, lots of questions I'd ask them is, look, in terms of scaling, how do you put the right person at the right job? And basically, what did you discover was the right job? Like, where should you be devoting more resources to? Because that's an age-old question, right? I have resources, but where should I be directing these to? Then, how did you decide what a roadmap was? And how do you manage yourself during supposedly less business intense times? Or rather, how do you decide to diversify your holdings, if at all you did? And if you didn't, then what was the reason behind it? So more stuff like that than mindset or anything.
Great. And what are you going to be doing during this time? Are you going to be sitting on the sidelines indefinitely?
No, we're always in the market. We're always you always have to be in the market. I don't care what business you're in. Okay, you always have to be in the market. Now, you might not transact while you're in the market because you don't find the right price or it's not a good fit, but you always have to be in the market. Look, because it's a relationship business. Look, the brokers, you got to realize, people somehow seem to think brokers are weird or they don't give them deals or whatever. Look, the broker's trying to just put food on the table. Okay. Honestly, most brokers don't give a shit if it's you or the next guy, as long as they get the highest price or the most appropriate price for their seller, as an example. So, but you got to realize these are human beings. They're trying to make a living the same way you are, right? So understanding that it's not personal, only one person or one entity is ever going to get a deal awarded to them. So the other 5 or 10 or 15 or 20 people that didn't get a deal awarded to them, they're going to be aggrieved. I mean, shit, I'm one of those people, but it's never personal. So always be in the market, always try to be respectful, always try to, keep developing relationships, right? And understand that, sometimes things don't work your way, but people, look, if you're the right person and you put one foot after the other and you're respectful and professional, people remember that. Things go a long way. And contrary to what's shown on TV, being a nice, easy, flexible person in reality actually does pay dividends. People want to work with nice people. So always be nice and respectful.
Awesome. And what's the best way that anybody can reach you, Omar, if they had any more questions or they wanted to find out more about your company?
So you can just go to our website, Boardwalk Wealth. It's BOARD walkwealth.com. I think that's going to be the show notes, right?
Correct.
And right on the front page, there's a little box. I'm forgetting what it says. But if you scroll down, you'll see it. It's on the bottom right. Yeah. So it'll have your name, email, and how'd you find out about us, and click the button below it. And you'll get an email. Click a link in it. It'll verify you. if you want any advice, even if it's not on our own deals or investing somewhere else, please reach out at info@boardwalkwealth.com. I or some member of my team will be happy to assist you.
Awesome. Thank you so much, Omar, for taking the time to share your experience. You're very, very blunt, very, it is what it is. And, it's kind of refreshing to see some different qualities on the show. But until next time, Dealmaker community, I'll talk to you later.
Thank you very much for your time. I really appreciate it. Have a good one.
All right.
Bye.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.